What is up, blockchain gang? This is the Daniel Draghi Show, and today we're going to pump up the volume to help us increase our earnings by knowing when to buy and sell tokens. Remember, I am not a financial advisor, but that doesn't stop me from giving unqualified, unregulated, unbonded, non-fiduciary, uninsured, unchecked, for-profit financial advice on YouTube, as long as I tell you that it's only for educational purposes and that you should do your own research. I did a previous video that focused on setting stop losses and other ways to prevent losing the assets you are holding. If you haven't had a chance to check it out, it could literally save you the small fortune you have been grinding. Since the Wemade wallet does not allow you to set a stop loss, I would never recommend holding a large amount of any tokens other than Wemix, and that would only be on an exchange that allows you to set a fucking stop loss, because this is almost 2023 already. So get with the program Wemade if you want your players and investors to stop loss their assets on a regular basis due to the volatility of cryptocurrency. The problem with the Wemix DEX that I hoped would be solved with the release of Wemix 3.0 is that you cannot protect yourself by setting up a stop loss on the tokens you are holding. This means a game could get hacked, exploited, or one of the senior developers could be caught smacking a child in the face on camera, and your holdings could become worthless without the protection of a stop loss if the market crashes as that video goes viral. If you're lost, a stop loss is just an open market order to sell all of your tokens if the price falls below a specific level to limit your exposure and subsequent risk, or to lock in profits once the token reaches a predetermined high mark-in price. The DEX does allow you to do this, which has helped me secure nice gains while I've been sleeping because I would have otherwise missed a profitable selling point. When you attempt to set a stop loss in the Wemix DEX for any token, you'll receive an error message that you cannot put in a sell order that is lower than the current highest buying price. This could change with the new mainnet, hopefully, so players can stop getting hosed by market manipulations and outside factors that are beyond their control. Delisting. Excuse me. I would love to show you a visual demonstration of this, but the Wemix app blocks any software or device that I use in order to cast the display, except for the wallet emulator, and I didn't use that because... okay, fuck it. I'm just too lazy, alright? Is that what you want to hear? I mean, I'm too lazy to finish this excuse, and you think I would do all of that fancy animation crap? I hope you're happy now. One way to get ahead of the market is monitoring the trading volume of a given token, as this can give us some very keen insights on what is likely to happen in the future, or more specifically when it will stop happening. For starters, the larger the trading volume of a token is in general, the price should be more stable, and the smaller the trading volume is, the price of the token will be more unstable. That means it will have much wilder swings due to news about the project or whales entering and exiting the market. Keep in mind that when I refer to whales, I may not be speaking of a single wealthy player, but perhaps a conglomerate of wealthy people pulling their fortunes together to influence the value of DeFi services to the detriment of typical players' earnings. The volatility here, or trading volume, is your risk factor. The bigger the potential downswings, the bigger the potential gains and losses. What we are most interested in is the change in volume over time. This can be seen in the DEX app if you go into the token and select price between the order and token info tabs. Then switch to daily view to get an idea of the average amount traded on a daily basis. I don't really use this as an indicator of when the price will change, but as an indicator of when the price will stop changing. If the price of a token is falling or raising consistently, it is helpful to know when this will stop, because a correction or reversal will usually follow, and that is the trigger to trade for maximum profits. Large changes in price usually only come from large changes in volume, and when the volume starts to slow back down to normal levels is usually when the correction comes into play. For example, if a token was already at 1 Wemix and for some reason it started crashing with a very high volume, once the volume started to slow back down at a price of say 0.5 Wemix per token, it may be a good time to buy in. If the coin starts to recover over the next few days to 0.75 Wemix, you have just made a 50% profit before fees. However, you might notice that the volume isn't slowing down, so it may be good to hold it even longer until you see larger gains. Remember that the smaller the overall daily trading volume is in real dollars, the larger the risk you face of the token never recovering, and should be taken into consideration in any assessment. You should also expect to lose on some trades. Winning feels great, but losing feels 10 times worse. So never put all of your eggs into one basket. Sure, I may dream of returns that I would see if I only committed to that one call, but I also remember the nightmares of the times that I did and it didn't work out the way I hoped. The goal is to make more right calls than wrong calls, and to have your right calls pay more than the wrong ones cost. If you feel very strongly about a token going up in value, but it goes down instead, you have three choices. You could hold the coin and hope for it to appreciate. You could sell the coin for a loss and limit any further losses, and then go on to Discord and try to get other people to sell their coins by telling them it's a scam. Or you could double down and look at it like you're getting the token at a discount. Again, I would never do this unless I felt certain a token had to go up in value for multiple reasons in a very short period of time. Make sure you are not just rage trading because of hurt feelings and embarrassment. That is a very real thing. This way, once it returns to the original value you bought it at, you will have already made a profit on the second set of tokens that you bought. I don't know if anyone out there needs to hear this, but sure, there is always option D, where you could just kill yourself. But we don't need to mention that every time life throws us a multiple choice scenario. If you are feeling suicidal, please get professional help immediately. Then come back and finish this video so we can make all that money back. I mean, look at Trump. He lost all of his money 7 or 8 times, and he became the president. Next, I like to look at the number of concurrent players published on the Wemade website. I'll also check to see if the game is in a growth or a shrink state due to launching or merging servers, or if it is stable. This can be found by searching through the official Discord announcements. I'll compare this data over time to the total number of wallet holders from the Scope website. Links to all of this will be in the description. All of these figures will give me a general idea of the current state of the player base, as the token price follows this most closely. Finally, I'll look at the patch or season cycle. When a large update is released, it is usually followed by an increase in price, especially if a new use for the token was created. However, if the expansion added new ways to gain the token, it could actually cause it to fall. When game-breaking bugs or exploits are discovered, the price will usually drop. At the end of a season, when a massive amount of rewards are distributed at one time, the token will fall, just like when an airdrop is released, or a portion of the dev team, investor, or influencer tokens become unlocked. When a lockup period ends for a staking program, the price will usually go down as well. These are mostly all bad for holders of a token, which means that most tokens will perpetually be in decline. However, most of these events send the token lower than they should be due to panic selling. Once this reaches an artificial low, it is an easy way to obtain a quick and dirty 20% gain on any tokens you decide to risk. To be frank, you are gambling here on the ability of the devs to implement a fix or solution that will satisfy the majority of the player base. So choose wisely. The next thing you need to consider is current circulation. This can be very misleading due to members being involved in the Fusion Alliance. Here we can see these tokens have over 400,000 in circulation, but that is not entirely true, since we know that over 370,000 tokens are locked up in the Reflect Alliance holders Fusion token vault. You would have to break apart those tokens and pay a 5% fee in order to trade them. Many of these tokens are not even real tokens, but accumulated fractions of tokens spread across tens of thousands of wallets. However, they cannot be sold because they are a fraction of a token, and you can't sell fractions of a token for some reason. Bullshit. Sorry folks, I think I'm coming down with the case of the blues. Moreover, if you held a single Reflect token, after paying the heritage fee to break it apart, you would be left with 0.95 of each token in the alliance, which means you would not be able to sell those either unless you break apart at least 2 tokens, and you wouldn't break even Steven unless you broke apart 20 Reflect for 19 whole tokens. This is like a grocery store that gives change but doesn't accept it. It's like our money has to jiggle, but theirs folds. So in other words, most of these tokens in, quote, circulation are actually not on the market itself. Once you subtract the Reflect tokens, you see the true circulation that is liquid. This is important because the rate of circulation growth is going to be inversely proportional to the price. It means that if the game is allowing players to mint more tokens than people need, the price will fall until earners quit the game or changes are made to earning. If the rate is shrinking, then the price should raise because players are buying the token and burning the resources faster than they can be produced. The only way the price can sustain itself while more tokens are being produced is if more players are coming into the game who will then buy these tokens, which is the textbook definition of a Ponzi scheme if the developers don't address it. Essentially, they have to come up with the design where if you don't spend a moderate amount of your tokens on progression, you will stop earning tokens altogether after a short time. But that is a whole different topic about botting for another video. A quick side note on trading in the future, the Wemix stablecoin will be a great way to help players and investors alike. It allows you to take profits without putting them at immediate risk, similar to a money market account in stocks. You can also keep a cash reserve that won't depreciate in value as it's stored. That way, when there's a good time to buy a token, you'll be able to pull the trigger. Instead of trading between Wemix and Hydra, for example, I can park the money in Wemix dollar coins until the price drops. Normally, these profits would have been diminished because the relationship between the price of Hydra and Wemix, but now we can realize its full potential. Now, after observing all of these points of data for a week or two, I'm ready to start making intelligent moves. These allow me to see macro aspects of the market to predict trends, but never forget, just because all indicators point towards the market going up does not mean the market will do that all of the time. She is a fickle bitch, and she does what she wants to do. So you have to maximize your gains while stifling your losses if you don't want her to throw you. It means you have to do your due diligence and always resist the temptation to go balls deep with the ham and the eggs in the basket. I never make a move more than 25% of my holdings, and I would never invest more than 10% of my total savings into something as silly as crypto at this early stage of its technology, because it's like the .com bubble, Wild West days. I would also not be investing my own money while also paying interest on a car or a home loan unless it was being matched by my employer or government. You should only be playing with beer money, and that's it, folks. Invest at your own risk, don't be stupid, like and subscribe so we can do this again sometime.
Yeah!